Welcome to this week's Money Metals podcast, helping precious metals investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the fastest growing precious metals dealer in America, Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. I'm happy to welcome back our friend David Morgan of the Morgan Report and silver-investor.com. David, good to talk with you again. How are you?
Mike, I'm great. Thanks for having me on the show.
Before we get into the meat of what I wanted to discuss with you today, please first give us your take on what you're seeing in the market right now, what you make of the recent action, especially since we saw the big drop a couple of weeks ago. Are we nearing a floor? Do you anticipate testing the low 15 range in silver again? Basically, what's your assessment here, David?
Well, I've seen a lot of smart investors because the U.S. Mint has been inundated with orders, and the Mint isn't able to keep up with demand. That doesn't mean there's a shortage of silver. It means there's a shortage of silver eagles because the demand's greater than what they can supply currently. So that shows that at least some of the silver bulls haven't given up. So that warms my heart, so to speak. Secondly, I've talked to some of the larger dealers, such as yourself, Mike, and there's one that has both a retail and a wholesale side, which many of the bigger ones do, and they're basically running out of product. I mean, of course, they'll lock in the prices, but this is an outfit that, $1 million order was not a big event for them, and it is for a lot of mom-and-pop operations. So if someone came in with, $1 million and it cleared, they could walk out with $1 million in silver, not a problem at all. A client of ours that we've dealt with over the years dropped his membership for a while. He assessed the silver market, decided he wanted to get back in, signed up and did a little quick consultation with me, and he went in to buy 6,500 ounces, and he walked out of that place with 400 ounces. 61 100-ounce bars are due him, and that's not the normal scenario for that particular dealer. There's nothing wrong with what I'm saying other than that the supply is much tighter than the price might. To answer your question fully, I expect a bounce here. I want to see what happens around the 17-ish level and see if silver busts on through. If it busts on through it to the upside, then that means we've got a much stronger market than many of us anticipate. On the other hand, if it stalls out and then falls, I expect the paper paradigm, the paper pushers will push the price down to the end of the year like they have the last few years in a row. But I also know that there isn't much $15 silver out there. There's not much $16 silver out there, and there's probably not very much $17 silver out there. So my overall assessment is this won't last much longer.
We're certainly seeing supply tightness as well from the refineries and mints that we work with. A lot of it's production bottlenecks, as you mentioned. There's not necessarily silver shortages yet, but we are seeing some difficulty getting product timely. So we've seen prolonged period of suppressed prices in the metals for quite some time, especially for silver, and that's even before the recent takedown late last month and early this month. So I have to think this is going to have an effect on the mining industry, about which you are an expert. What are you seeing out there? How long can we have prices at these levels and still have any sort of a mining industry?
Great question. The real answer is it depends on case-by-case basis. In other words, some companies have better cash positions than others, and some have better margins than others. But the industry as a whole is not much longer. I would give you a WAG. I think everybody knows what a WAG stands for, probably like 6 more months. You have these kind of prices for 6 more months continuous. I think you'd see a lot of these primary silver producers go on care and maintenance.
It does take a while for these mines to get back up to speed once higher prices do come about and they want to get back into it, and it makes sense to do so. But it's not a switch that you can just flip and immediately start producing a lot of ounces again. I mean, it takes a while, right? There's a lag.
Absolutely, there's a lag, and that's why many will operate at a loss, because they have to do an overall economic assessment, and they have to determine, are they willing to lose $4 for every ounce they produce, but yet the startup cost if they go on care and maintenance is going to be X amount. So it's sort of like a break-even analysis. They have to determine how long can they lose money producing versus if they shut down and restart, what are the costs there? So it's a trade-off study. So it's not an easy answer to get to, but that's why you'll see, people ask a common sense question. Well, why produce at a loss? Just shut down. But it's not like it's a candy store or something. You can lock the door and the inventory is going to be good for the next 6 months or whatever, and you come back in, turn the lights on, you're back in business. It's not that way at all in the mining business.
I'm sure there are people out there that would point out that silver is mined primarily as a byproduct of other mining, so the price of silver doesn't necessarily drive a lot of business decisions for these companies who account for most of the global silver production. But even if we're talking about the silver-only producers, the 20 or 30% out there, what effect would it have if those companies bite the dust or shut down? I mean, that's not a huge amount of the overall production, but it would still be a major deal given the very small margin there is on the supply front, would it not?
Absolutely. All markets move at the margin. It's the last bidder that gets the item at an auction. So it's bid up and up and up. If it's a desired item, automobile, whatever's being bid for. And it's the same in a free market, the little that we have left in these markets. But still, it moves at the margin. So every ounce that comes off the market makes the supply tighter and tighter. And, there's not a lot of incentive for some of these base metal markets either. I mean, zinc from the high is down 51%, lead from the high is down 47%, nickel's down 70% from the high, moly is down 73% from the high, and even copper, Dr. Copper, the overall best looking for what the industrial demand is globally, is off 34% from its high. So all these markets, the ones I read primarily are contributors to the silver supply, lead, zinc, and copper, are off as well. So that a lot of those mines are not putting out massive amounts. And then China looks like it's in a state where they are not going to be leading the global economy with huge demand in the base metals for a while. They have a lot of internal problems going on financially with the overbuilt housing or apartments, et cetera. So this is a setup where the cycle that goes like too low and too high is in a too low position right now, Mike.
You have more of an ear to the ground than probably just about anyone, and you're talking to these people all the time, and I know you recently met with a number of the players in the business at the Silver Summit last month. How did that annual conference go this year, and what is the sentiment out there right now given the beaten down paper prices for gold and especially silver?
Well, it was a great conference, but the attendance was definitely on the low side. The people that were there were realistic. I think a lot of them are, have conviction, companies included. I mean, the investor side and the company side. We interviewed almost every company that attended. But the overall feedback that we received was that if it's like this next year, they're probably not going to come back to the Silver Summit, meaning that the attendance on the investor side just wasn't robust enough for them to justify spending the money that it takes to fly in, set up a booth, put people behind a table and, answer questions, that kind of thing. On the flip side, I had about 3 companies say, this is an incredible audience. Everywhere we go, we get, questions and, that type of thing. But this is the most astute audience we ever get. They ask the most in-depth questions and keep drilling down more and more information that we don't see anywhere else. So, bright spot definitely for the Silver Summit. But again, attendance poor. I doubt that this is going on a whole lot longer. I think a few more months. I think 2015 is going to be better. But, the market knows more than any of us, and I've said that more than once.
You mentioned to me offline that the smart companies can be real opportunistic at times like this and get some great value in the mining world. Talk about that.
Well, there's one company that's been on the list for the Morgan Report as a speculation, and it's for a variety of reasons, but it had a energy and a metal side, and we got interested in it for the overall undervaluation of the overall company. And basically what happened was one of the mining side or the metal side got spun off for free. So our shareholders, if they followed us in, got a very, very nice project as a consequence of buying the main company. that same company's gone back to the metal side. They kind of broke off onto just the energy side. Now they are bought one of the best deals in the silver industry that I've seen in a very, very long time. And we at the Morgan Report have been invited down to do an analyst tour. And it looks like one of us will go for sure. It may be me. It's most likely going to be David Smith and or Chris Marchese. And they will go. And, of course, we do a little different than a lot of the newsletter writers. We do like a film expose on the trip so that the people that are, members of the Morgan Report actually get to, hit the play button on their computer and watch the interviews, you can see what's going on. And this is a very, very great project. Well, I think the most important thing I can say is that, like a good investor, this company is buying silver for pennies on the dollar rather than trying to do something else. They see the opportunity to buy silver in the ground for literally pennies on the dollar. So this is going to be something that will be very lucrative, I think, for this company. It also balances the energy side, which I like much better. And I think it's going to be something that our subscribers will be happy that they held on this long to the main company, because this is definitely going to add value to all the shareholders.
Switching gears here a little bit, there is a vote coming up that many in the precious metals and central banking worlds will be keeping a close eye on. I'm talking about the initiative on the ballot in Switzerland later this month, where they will vote on whether to require a 20% gold backing of the Swiss franc. What are your thoughts there? What do you think will happen on that vote, and what ramifications do you think it could have, whether the vote is yes or no? And it's looking like a real toss-up right now from what I've heard.
Well, my thoughts are, one, I commend it. I mean, it was disheartening to me, to say it politely, when the Swiss caught the Keynesian disease so many years ago and, sold off a lot of their gold and decided to do this, neoclassic economics, the Keynesian model, and just, print wealth, which is impossible. You have to, develop wealth. You can't just print it. And so now to see them come full circle and come back to kind of the roots as a gold-backed type of situation, I think is great. That's my personal feelings. As far as will it pass or not, I say it's a toss-up. If it passes, I think you'll see the gold price go down almost immediately. And the reason for that is to break the psychology of what just took place, because the paper paradigm is so strong by the central bankers that they will make sure that there's lots of paper sales going on to look as if the referendum doesn't mean anything for the price of gold. But that would be a temporary thing. And of course, you get a lot of mainstream news and Mockingbird press saying, "Oh, the referendum passed, but gold was down 4 days in a row, blah, 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 blah." However, it would mean a great deal psychologically, because what it would put to the world stage is that not only is gold important, but probably the best aligned to the gold community is Switzerland. And that would reverberate all through Europe, and it would resound around the world as well. So if it were to pass, you might get, as I said, something you might not expect. I've been in these markets for 40 years. I've seen it time and time again, where common sense would tell you that the gold price would have to go up and such, and it doesn't. And there's a very clear reason for that, and it's psychology. But again, in the longer term, it would be a psychological shift that would be very, very positive to the gold community and the world financial system at large.
Definitely give credit to the Swiss there for even making this choice available for its citizens. I have to think that one of these days all the other nations are probably going to be forced to have a gold backing of their currency to restore confidence when things finally do tip and fall. We're nearing the end of 2014 here, a year that has not been good for metals investors. What are you looking for as we head down the home stretch, and then what do you expect for 2015 for gold and silver?
Well, I'm still optimistic. I mean, there is a possibility that we might, as I said earlier in the show, might see, see gold over the 1,200 level and keep going up, and silver breaking through the 17 level and keep going up. I don't rule that out. It used to be that we had a seasonality that the metals did really good near the end of the year every year. But but that's been broken the last 3 or 4 years, and I expect that's probably going to be what happens again this year, but we have to wait and see to know for sure. Moving beyond the next month and a half, what we're going to see is probably a pretty good shot in January. All the tax loss selling and everything that takes place at the end of every year, it's been such a poor year, as you said. You're going to see, the washout, which I think we're already seeing, or maybe it's behind us, don't know yet. And then it's going to have a pretty good rebound in January. And I think it's going to carry through. I look for 2015 to be a year where I thought it would be this year. I thought we would see a shift where the global economy kind of wakes up to the fact that this recovery isn't for real and something's got to be done. And as you said, Mike, this run to gold, however you want to term it, is going to start in a greater population base. In other words, more and more people will be waking up to it. But that didn't happen in 2014. But I'm almost certain it will in 2015. These things can only go so long, and the pendulum can only swing so far one direction. So I'm pretty positive about 2015. It won't be hugely positive as far as running up against the old highs. I don't see that happen in 2015. But I see this washout completion. I see a new base being built. I see the massive sell-off that took place at $26 silver and $1,500-ish gold being breached to the upside, and that becoming the floor again, which was the floor for both the metals for so very long. And once that's established, then we'll have a psychological shift. And people that have been just coyly watching the market or maybe got out or weren't sure or were smart enough or lucky enough to get out and hold their cash for their metals part of their portfolio will start to come back in. So I'm still very optimistic. I mean, the basis for why you would buy precious metals haven't changed. I mean, fundamental facts remain the same and are stronger than they've ever been.
Yeah, couldn't agree more. 2015 being a good year would certainly be a welcome sight for precious metals investors, and I hope we get it. Well, excellent insights, David. Thanks as always, and we hope to catch up with you again real soon.
My pleasure. Thank you.
For those who haven't yet signed up for the Morgan Report, we have a special offer for Money Metals Market Wrap podcast listeners, the ability to get a no-risk trial of the Morgan Report newsletter, plus free silver. For any listener that signs up for one of these refundable subscriptions today, Money Metals Exchange will ship you a free 1-ounce silver eagle. The information in the Morgan Report is quite literally worth its weight in gold for anyone investing in or just thinking about investing in the precious metals sector. To take advantage of this special deal, please look below today's podcast. Well, that will do it for this week. Thanks again to David Morgan. Check back next week for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.